Hello everyone, Tom for the Market Zone here with a new weekly market analysis video in which we're gonna review and talk about the setups that I mentioned in this week's newsletter, the weekly markets analysis. Hey guys, what's up? Thank you for coming back to my channel and thank you for watching this video. In this video I'm going to cover some of the setups that I mentioned in this week's newsletter, the weekly markets analysis. But if you want to read the full newsletter with all the setups inside, you can do it by visiting www.themarketzone.net. Go to the weekly markets analysis tab and read the first post there. I would like to start this week's analysis with EURUSD. In last week's video I mentioned two potential trading scenarios for EURUSD, bullish one and bearish one, with a key price zone being 1.17. Since then, thanks to Draghi and the situation in Spain, EURUSD broke below 1.17, closed below it, and now it seems like it is making its way towards 1.15 to test the weekly structure zone that you see right here. Now, if EURUSD will indeed continue lower and test the 1.15 structure zone, it will not only just test this strong weekly structure zone that was resistance and now should act as support, it will also complete two harmonic patterns, two AB equal CD patterns, with the difference between them is just from where I pulled the AB and the CD legs. But basically what we get here is a 50 pips wide potential reversal zone, harmonic potential reversal zone between 1.145 and 1.15. For now we are seeing some sort of a relief rally in EURUSD, some positive news from Spain, profit taking from last week's price action, and also a weakness that we see in the dollar index as investors are starting to protect their positions towards FOMC. Another trade scenario that was also mentioned in this week's newsletter is of course the harmonic trading scenario that will be relevant if EURUSD will reach all the way down here to 1.15, complete the ABCD patterns, test the weekly structure zone and show some signs of strength, show bullish reversal signs that will allow you to time your bullish entry, your long entry on EURUSD, anticipating that EURUSD will create a pullback that will drive EURUSD price back towards 1.17 to test it as resistance, and also to test the daily downtrend that was recently created. Moving on to the Spanish index, IBEX35. I mentioned that this index closed above support last week, despite all the mess in Spain, despite the Catalan independence vote, despite the Spanish government counteractions. This index, the Spanish index, closed above support, the support zone included. This broken weekly downtrend line, the 50-week SMA line that you can see acted as support, and of course the 10,000 psychological round number that also acted as support. Now it's just Monday and it's still too early to decide what will happen with the Spanish index in the near-term future. We will have to see the weekly close on Friday to determine whether or not Ibex is out of the woods or not. But for now we are getting bullish signs from the Spanish index, a rally from the 10,000 support zone, and right now the price is above the resistance level that I mentioned in the weekly newsletter, 10,500. Now if you are trading the Spanish index or simply want to understand what's going on, I highly advise you to pay close attention to the yellow line that you see here, the fast MA line, the 18 SMA line on a weekly chart. As long as the price of the Spanish index will remain above this fast MA line, it will continue to provide us with bullish signs, with reason to believe that it can climb higher. But if the Spanish index price will decline and close back down below the fast MA line, consider it as a false break scenario, a potential warning sign that can drive the Spanish index back towards 10,000 to test it as support, and maybe even break below and create a monthly false breakout signal. I want to dedicate the last part of this video to Pound USD, the cable, which is moving towards a potential historic event this Thursday when the Bank of England is expected to raise rates for the first time in a decade. Now we are seeing that aggressive traders, investors are already starting to position themselves towards the historic event, starting to buy the rate hike scenario. buying the potential support zone that I mentioned in this week's newsletter, and the pound USD is already up 0.6% today. Personally, I think it's too early to jump into trades when it comes to pound USD unless you are day trading. I think that pound USD and all pound pairs will become more and more volatile as we come closer to Thursday's meeting. And also, we shouldn't forget that we have FOMC this Wednesday that can also create some waves in pound USD. So for now, I prefer to sit aside and wait to see the price action around the key price zones that I'm going to describe right now. The first technical element that you need to pay attention to when you talk about pound USD is this weekly rising wedge that you see right here. The direction of the breakout from this rising wedge pattern that you see here, that has been keeping pound USD's price inside it for more than 18 months now, will determine whether or not we're going to see a massive rally in pound USD, a correction wave, a breakout of this weekly trading channel, a correction wave to Brexit, a correction wave that can drive pound USD all the way up here to 1.5 to create a double top. And the key support zone is 1.3, 1.31. It includes the bottom of this weekly structure zone that you see here in green. It includes the fast MA line that still acts as support. It includes the bottom of this weekly rising wedge that I mentioned before. And of course, 1.3 is a psychological round number, a psychological price zone that should act as support as long as the price stays above it. In order to show you some resistance zones that I think that you should pay attention to this week, I zoomed into the daily chart, and here you can see that today's rally has already driven pound USD's price straight into the first resistance zone, which is the confluence zone of two MA lines, two daily MA lines near 1.32. That's the first resistance zone. The next resistance zone, in case the pound USD will overcome the current one, will be 1.33, 1.335. I'm talking about this small structure zone that is here, the small top near 1.33, and the top of the rising wedge pattern. The last resistance zone, and probably the most important one, the critical one that I think that you should monitor this week, is 1.34, which will be the 618 Fibonacci correction wave. The 618 Fibonacci correction move from this swing low. As you can see, it's right around 1.341, and but also more importantly, it's where the price will probably test the option to break out of the weekly trading channel that I showed you before and confirm the breakout from the rising wedge, signaling that pound USD is heading higher, probably towards 1.38, 1.4, and maybe even 1.5. That's it, guys. That was this week's weekly market analysis video. Thank you very much for watching. Don't forget to subscribe to my channel and activate notifications so you won't miss the next video. And don't forget to subscribe to the weekly market analysis newsletter. You can do it by visiting www.themarketzone.net. Go to the services tab, press the free weekly newsletter, leave your details, and you'll be in. You will start getting the weekly newsletter each Sunday to your emails. Thank you again, and see you in the next video.